Welcome to Crypto Kid Podcast. So today I have a special guest, Mr. Emmanuel, and he is an author of financial banking. I'll let him say the actual quote to the book. Quote to the book, and he does business here in the United States. He's from Singapore, and he's He's well known in the industry that he's in, and he's very successful. And I'm a pleasure to have you, Mr. Emmanuel. So why don't you give us a brief introduction about yourself and how you got in the DeFi space?
Hi, Sunny. Great to be talking to you today. I'm actually in China, in Beijing, China right now. I spend a portion of my time here. I spend a portion of my time in New York, and I'm from Singapore. That's true. I just published my first book, which is The Great Transition. The personalization of finance is here. In fact, I have the book right here, right with me. And if you see on the cover, there's a picture of an ice cube. So what I'm saying to traditional bankers is that the finance industry is becoming increasingly personalized, and it's the result of not just because of banking becoming personalized. It's actually driven a lot by the technology. So I'm also speaking to people in the technology industry, saying to them that the platforms that we now know, that we are familiar with, are going to disintegrate into greater personalization. And it's driven by all of the stuff that you cover, study, blockchain, cryptocurrencies, and staking, and all the activities that take place in decentralized finance today.
Excellent. And I'll have the link for those who want to read the book in the description down below. And so with this banking industry and the new technology that's coming out, how many countries have adopted cryptocurrency as a legal tender? Are you there? Did pause on me? All right. Did you hear my last question, or did it break off?
No, I didn't.
Okay.
It broke off.
Okay. So since you're well known in the banking industry, how many countries have adopted cryptocurrency as a legal tender?
Well, I think as of now, legally, it's just El Salvador, but in an informal sort of way, a number of countries have started seeing, Bitcoin as an alternative currency, and I think that the people in traditional finance are wary of countries that are friendly to crypto as a alternative to fiat currency. It's a state of play at the moment. It's in a state of play in that every country in the world is looking at how El Salvador will eventually pay its debts, meet its obligations, balance keeps its balance sheet balanced, and so on. But Venezuela is a country which widely accepts, cryptocurrencies, and a lot of work is going into putting in place the infrastructure so that people can use crypto on a daily basis. And I think that that's where the general use of crypto will come into being. Already you see a lot of work being done to simplify the process of exchanging crypto between individuals, the Lightning apps, and so on. From there, I think that it's just a matter of time before crypto is widely regarded by central bankers. In fact, last year in November and in December, the Bank for International Settlements in Basel released a paper outlining how central banks will start to hold crypto from 2025. So it is becoming an accepted form of assets on the central bank's balance sheets. So even if countries don't accept crypto overtly, crypto is starting to become a part of the overall monetary assets of many countries. And it's just a matter of time before it becomes commonplace.
Now, I remember when back in 2017, and cryptocurrency was highly like frowned upon towards central banks and all that. Now, why this such rapid change? Why this sort of change of heart with banks getting involved with cryptocurrencies and the DeFi network?
I think that it's from the way in which I follow the industry. I think it was just a matter of becoming comfortable that crypto is here to stay, and we've got to deal with it whether we like it or not. The initial reaction of central banks, if you remember, was to propose central bank digital currencies, CBDCs. And I've visited some of the countries and spoken with, privately with several of the central bank governors of the countries that have CBDCs running in their countries, and actually you can look them up. You know which ones they are. And they essentially are saying to me that CBDCs are not working, that it's so difficult to get it off the ground, and the mechanism of CBDCs is that it actually disintermediates the banks in any case. In other words, here the central bank has introduced a digital currency issued by the central bank, now doesn't need the banking system to get it to the end user. And then they scratch their heads and say, well, you know what, we still need to use the banks, and then they went about in a roundabout way and coming to terms with the fact that I think what we have here is a solution looking for a problem, which is, the technology works, but why would we want as central bankers to disintermediate the commercial banks? And the central bankers discovered something which the big digital payment players, always knew, which is to introduce any form of new payments. You've got to do a lot of push. You've got to spend a lot of money, making people get used to it and creating critical mass. So the central banks went through a process learning all of this. And as they were learning, cryptocurrencies were becoming increasingly better developed. And if you look at what central banks are doing right now on the central bank digital currency front, they're just playing catch up. They're trying to keep up with the technology that's being developed on crypto. Interoperability, staking, and the ability to have assets pushed from one token to another, and so on. Now, and all of these developments on the crypto front are being done on open source platforms. In other words, hundreds of thousands of programmers, playing around with different tokens and coming up with applications. And central bank digital currencies just can't match. So I think that's what resulted in the BIS, and actually the Bank for International Settlements, which is like the organization that holds all the central banks in the world together. They decided that, you know what, we better start providing guidelines in terms of how we can start co-opting cryptocurrencies into what we do on payments in the different central banks around the world. So that was the paper that they released in December last year, which is very important because that's the signal that they're getting comfortable with cryptocurrencies. The funny thing about cryptocurrencies is this, that it's not that Bitcoin went up to $65,000 and that if you hold your crypto, the right crypto, for a long enough time, you become rich. The magic of cryptocurrencies is that every one of us can introduce our own crypto. You can, I can, anyone can. And that's a feature of crypto, which I think that many of the policymakers in the world haven't figured out yet. That's what they need to deal with, which is, what are the rules by which the asset created or the value created in a crypto. If you issued a crypto, what about your crypto makes it valuable for your friends to want to accept it, and so on. And so all the cryptos that are being created in the world, whether it's FTX or Luna or whatever, they go through the same process. So the governance structure, the ability to to discern which cryptos work and which don't, that's the story of the world for the next 20 or 30 years down the line.
I concur. I completely, because we need more accountability, and I think more regulations will help that and keep things on a level playing field. Now, since you brought up FTX and Luna, do you have any recommendations for financial institutions that see its customers use their bank accounts for purchasing cryptos?
I think the question you're asking is based on the market value of crypto. So when it comes to the market valuations of crypto, if you ask the same question about securities, about shares, do you see that governments should protect their citizens from owning shares because it's volatile, it goes up and down? Well, we know the answer to that today. You buyer beware. That is, you have to do your own research and come to understand what the underlying value of a security is. So long as we treat crypto as a security, we will have all these concerns. But crypto is on a journey. It's going through the phase where it's being traded and in a very speculative manner, but it will come through eventually to a point where the utility is greater than the speculative value of crypto, and that's what we need to get to. I really don't care what the price of Bitcoin or Ethereum or any of the cryptos in the market right now. And as for crypto as an asset, I think that Bitcoin has proved itself to become the digital gold, as it were, because it's immutable, it's reliable as a technology, and so on. If it ever gets broken, then the story is totally different. But there is a need for gold as a asset of last resort to go digital, and I think that Bitcoin has answered that question. Now, as to all of the other cryptos, they are benchmarked against the function of Bitcoin as a digital crypto, and as against their utility, which is what are they created for? What problem are they created to solve? And so we are in a bit of a intertidal zone here. There's a reason to look at crypto as a investable asset, but there's also a reason to look at crypto as a utility. And I think that as it becomes clearer what exactly crypto is, the markets will start to stabilize eventually.
Oh, for sure, for sure. Now, how can you mitigate the risk associated with cryptocurrencies and cross-border transaction?
One of the risks associated for cryptocurrencies in cross-border transactions, they are far more reliable than making a transaction through the interbank channel, and much faster, and arguably much cheaper. I mean, except for gas fees and so on. I think the problem with cross-border transactions is the concerns that regulators have on KYC, know your customer, and to know that the two parties transacting are not using it for illegal reasons. I think that's the only and most, and if there are other reasons, this is the single most important issue that we face for cross-border transactions. And I think that increasingly it's becoming clear that even where transactions are between anonymous individuals, the technology is so well developed today that your regulators are only just 2 steps away from identifying, the parties in the transaction. And many of the platforms today insist that they need to do the KYC before they let you onboard their platform to do a transaction in the first place. So I think that the KYC issue is a non-issue today. In fact, if you think about it, a lot of the criminal activities and the stolen cryptos in the last 3 to 5 years have been recovered. And that's because it is possible to trace transactions. I'm not aware of any other forms of technology limitations for cross-border transactions. In fact, crypto is proven to be far more reliable than any banking system can provide in terms of cross-border.
Okay. I'm glad you shared that. Now, does a global regulatory framework exist for cryptos and digital assets already?
We're on the way getting there. You must read the BIS paper issued in December last year, and it demonstrated that the central bankers are fully cognizant of what they're dealing with. They're not like just trashing it or not applying their mind around all of the different issues that people in the crypto industry also need to be mindful of: liquidity, identity, and the governance structure for the different cryptos and so on, and also the whales, the role of the big players, and the ability to move markets and so on. I think that the regulatory regime now is the global regulatory community are already quite conversant with what they're dealing with, and the BIS, the Bank for International Settlement, that's the global body that we keep our eyes on to see how crypto is becoming more mainstream.
They're getting huge. It's once the bull market keeps going up in Bitcoin, you'll start seeing, you've seen it before, Bitcoin going on the news and everything, and people start taking it serious. But in my opinion, I think that's just a hype. I think the real players are the ones that stick to it in the bear market. Now, what challenges do regulatory agencies face today?
The most important challenge is, as I said, know your customer, the KYC issue, and they insist that any crypto being issued today that wants to be onshored in the different countries need to make sure that they know who's holding the cryptos and who the parties are in the transaction. The second is really the issuers themselves, the governance structures that they have in place to make sure that they are not defrauding the market, which was the case of FTX, where they issued a crypto. Anyone can issue a crypto. Anyone can even say what the price of the crypto should be. And if the market believes them and there's nothing holding on to that price, you are walking towards the edge of the cliff. So, and that's what happened in the FTX case. They issued a crypto, gave it a price, had buyers, and then because people were buying it at that price, I think it's $180, and then they used that valuation to go out and borrow money from their own bank. In this instance, another crypto provider could go and borrow money from another bank, and so the regulators want to make sure that the valuation of cryptos is not arbitrary, or anyone can provide that valuation on their own. So these are some of the rules that they're putting in place. With every fraud, the rules are getting better, and I think that eventually We'll have all the rules in place, and anyone issuing a crypto outside of these rules will just not find people who want to trade with them or work with them on their cryptos. And also when you think about stable coins, when a asset like a stable coin is priced at, say, $1 of the local currency, the central banks are putting in place regulation which requires them to demonstrate that they actually have the asset to back that $1. And that they have the accounting statements, and the auditing process, and so on, in place that makes sure that that backup assets are in place. So these are works that are being done by all of the major regulators around the world, and I'm confident that as they get these rules in place, the funny thing is, as they get these rules in place, it will be the banks themselves that would want to hold cryptos and even issue stable coins eventually.
Wow. Now, what are the crypto policy goals for both financial services and crypto industries?
Crypto policy goals, the most important policy goal is to make sure that there is no one player that can dictate terms and act independent of the market. I think that's the single most important goal, whether it is on the basis of the valuations that are given to cryptos, or even the liquidity in the marketplace, that there will not be whales that can act fraudulently or in their self-interest at the expense of the rest of the market. And just like for any security, it's transparency and accountability. These are just the two most important goals.
Excellent. So what's next for you, man?
Well, the interesting thing about this book that I've written is that as I was writing it, I came to the realization that when I think about the future of money, I'm actually thinking about the future of society as a whole. So, and then when I thought about the past of money, the past of the banking system, the best about the banking system was built on the back of stable societies. So and I say this at a very, very profound level. When you look at a commercial bank, for example, the best run commercial banks are the ones which had the cheapest form of funding, and the banks that have had the cheapest form of funding, deposit funding, were the ones that were closest to their local community. In the old days, it was because they had branches in all the right places, because the bank was run by someone that people trusted, and so on. Now, these are the values in banking that are being carried into the digital world today. And when I think about digital banks, for example, there are banks that will be able to say that, because we have gone digital, we are able to capture a lot more deposits than all our competitors put together. But because they don't have the social, the social fiber that ties them to their depositor base, they're also totally capable of losing that customer base that they are able to acquire quickly when the next competitor comes along and provides a higher rate. Then you realize it wasn't because they had a close connection with their local community. It was just because they were competing on price. That's for digital banking. Now, then you take it into crypto. There are applications for crypto in local communities. Like during COVID, for example, I came across community currencies, which were blockchain-based, closed community, where members of that community could give value for work done within the community that is paid on the back of a coupon, which is carried on a blockchain. And then in countries like the Philippines, I came across entire families that were earning an income through play to earn. And examples like that. So I think that when we understand what banking is supposed to play as a role in the community, and then we extend that to what crypto and digital finance is providing in terms of innovations, and the main thesis of my book, which is that finance is becoming personalized. In other words, you and I can interact with each other directly. Now that calls into question what's going to happen to the institutions, what's going to happen to the intermediation business, and so on. And so there are lots of questions that we're going to be asking at a community or social level, which today seems to be just a finance question. So I'm very, very interested. I travel around the world. I've been to more than 100 countries. And I plan to see even more to understand where finance can play a role, to advance local communities wherever they are. And even in the most depressed countries, if you think about where the innovation in payments are taking place today, they're not taking place in the US. They're taking place in Africa, where payments is been reduced to a transaction between two mobile phones, and that's it. And it works, and people can create an entire bank around their mobile device. So this is what I'm applying myself to, and it'll be very interesting to see how society itself evolves because of the innovations in finance.
It's changing the world. It already has in so many ways, So where can people find you and reach out to you if they have any more questions about banking and the financial institution?
Well, very simple, emmanueldaniel.com. My book is listed there. And then I keep writing on my blog to improve on everything that I'm seeing. So not just the book, but the new ideas that are coming on.
Okay. Is there going to be any events that you're going to be stopping by at?
Well, I'll be back in the US, in April onwards. So well, I've got a couple of events in Berlin, in and so on, and in Vietnam coming up next month. So I'll be all over the place, but several events in the US in October.
Okay. I'll be at the Bitcoin conference. I don't know. You should definitely stop by there.
I think I should be. I will be at the Bitcoin conference. Yes.
Oh, hey.
Thanks for reminding me about that one. Yes.
Yeah. Hey, we should catch up, and I'm looking forward to meet you in person. And do you feel like there's anything that we didn't go over that you want to give a brief talk about?
I think we've covered good ground. So I've said essentially what I want to say. I love your work. I see that you speak to some very technical people as well, and lots going on in the blockchain world. So this conversation was with somebody who's not from the blockchain world, but from the traditional finance industry, looking into the blockchain world and then understanding where we're headed.
I'm so glad that you're making the push for this. And one last question. How can I explain to somebody about cryptocurrency that's not backed by anything, or can it be backed?
I think when cryptocurrency started with Bitcoin being immutable, it is the currency for the network world. You cannot use fiat in the network world, and therefore the network world needed a token that had a value that could be transmitted in the network world. And society itself is becoming increasingly networked. A lot of what we do today is not physical anymore. It's not between you and me meeting each other. We interact thousands of miles away from each other, and we need a token with which we can transmit value to each other. Now that token is going to become even more complex as our own lives start to be partially physical and partially metaphysical, which is the metaverse. And why that is because the metaverse is a always on reality. It's not playing games. It's an alternative universe that we can, that we can switch into and switch out. And eventually, our lives are going to be partially physical and partially metaverse, right? And in other words, our friends are also going to be partially physical and partially metaverse. And so, because of the need to flip in and out between different realities, physical cash doesn't do it. So it's interesting that that this technology has come to being at just a time when human society itself is evolving that way.
I appreciate you, man. I will definitely take that advice to heart, and I wish you the best with your endeavors, and
Yep.
have a great night. I know it's like 1 o'clock in the morning where you're at. I really appreciate your time, man. I know you're busy and you're doing great work, and it's an honor to have this conversation with you.
Thank you, Sunny. Take care.
Take care.